Welcome students. Here we start with the new next lecture in the series. We are studying Unit 1 from your subject Income Tax Law and Practice, in which we are studying the important concepts related to Income Tax Act 1961, the important terms and the methodologies used to calculate the income and further tax on it. Now for today, I have taken the topic gross total income and total income. Last lecture we studied what is income, that what category of earning is considered as income and which is not considered as income and of which we consider for taxation. This part we have discussed before even in short. If you remember, um, income is divided into 5 heads under section 14, and the heads are income from salaries, income from house property, profits or gains of business or profession, capital gains, and income from other sources. The fifth category is the category which is exhaustive in nature. Whatever income does not fall in the above 4 categories come under this fifth category. So as per section 14, when the income is heads are defined, there comes the point that how to calculate the gross total income. If I talk about the section is 80B subsection 5. It defines your gross total income. The aggregate of income computed under the above 5 heads. It's like not mandatory that a person can have income under all 5 heads. Let's take an example how the aggregate of income under these 5 heads is considered. See, I am a salaried person. I am having income from salaries because there is an employer-employee relationship. The details of this you will be studying in Unit 2 under the head salaries, where we will be calculating the income and the income tax of the person who is having income from salaries. Now, as I have income from salary, along with that, suppose I do possess some property on my name and I am earning rental income from that. So the second source of income that I'm having beyond the salaries is income from the house property. Beyond that, I practice the profession of a teacher beyond my institution, suppose. So in that situation, I would have a gain from my profession as well, where I would be taking certain lectures for the students who are not a part of my institution, and I am giving them extra services and earning out of the way. So out of the 5 heads, I am having income under 3 heads. So how gross total income would be calculated? Because I am not having income under 4th and 5th head. So income from the first 3 heads, that is my income from salary, my income from house property, and income from my profession. Okay, all the 3 incomes would be added. Then clubbing of income, if any would be there. Clubbing refers to the incomes which are beyond, which solely I am not responsible. Suppose my child is earning, a minor child is earning some income, so I am liable to pay his or her tax. These kind of incomes, you will be studying that also in detail, and subtracting the set of losses if I do have any. In general, these losses are there under the head gain from business, and sometimes capital losses also. So let us sum up that what am I trying to tell you, that how to calculate the gross total income here. All the 5 heads: salary income, income from house property, business and income from profession, any kind of capital gains, long term or short term, any income which is not falling under these heads, income from other sources, plus the clubbing of income, and subtracting the set of losses if we are carrying any from the previous years. After making the adjustment of set off and carry forward of any losses, there comes out your GTI, that is gross total income, as per section 80B subsection 5. There is further way also to see this gross total income. See, it is also can be called as that it is a total taxable income under all the 5 heads, as per the case may be. Whichever person we are talking about, may it be a company, may it be a firm or an individual or an HUF, any of the 7 categories of a person. Under the 5 heads, before making deductions under section 80C to 80U. These are the deductions permissible under chapter 6A of the Income Tax Act 1961. We will be studying these 80C to 80U also in detail. So basically GTI is what? GTI is the taxable income under all 5 heads before making the deductions under section 80C and 80U. Okay, let's move further. Now, in that same context, how total income is being defined, which is actually the basic topic that we are about to study today. This is our topic for the day. Now, have a look to the context of the deductions under section 80C to 80U. The total income of an assessee is computed by deducting from the GTI all the deductions permissible under chapter 6A of the Income Tax Act, that is the deductions under section 80C to 80U. Means that when you subtract these deductions, I must give you an example here, like you know very well, if you are possessing some LIC, you're paying some insurance premium, under section 80C you will be able to avail the deduction. Means the income, the part of your income which you are paying off as a premium of your any policy, life insurance policy, you may avail the deduction. Means you are not supposed to pay tax on that particular income. Same way it go if you do any charity under 80G, that also is a deduction. If you are having any medical policy, if you are having any home loan or so where you have the interest factor involved in it. So these are certain deductions that I'm just discussing. But here the types of deduction, the 80C to 80U is not the point to enhance, that we will be studying later. At this moment, what is the point to understand is that what is the difference between total income and gross total income. See, it is very clear. Before subtracting, means you can see it, I have written it very clearly, before making the deductions under section 80C to 80U, that is GTI. And when you subtract these, when you deduct these options, this option of deductions which are permissible under chapter 6A, you obtain total income. Before subtracting the deductions, it is GTI. The time you subtract these deductions from the amount of your GTI, you are able to obtain the total income. I hope it is very clear. If you have any doubt related to this, you may write to me, because this is a basic concept, and if you are not able to understand this at this particular point of time, you will face a lot of problem at the later stage, where when we will be going into the details of chapter 6A or 80C to 80U, and when we will be calculating the income of an individual or any person. So you'll face a lot of problems. So I must repeat here that all the deductions which are permissible under chapter 6A of the Income Tax Act, means the deductions under section 80C to 80U, after deducting these from GTI, total income can be computed. Okay, let's move further. Now, how to compute total income? The steps in which the total income are involved for any assessment year is determined as the steps I have mentioned here. Determine, first of all, we see the residential status. That is about to be our a very important topic in the upcoming lectures, and I must tell you that it is a topic from which you get a numerical every year in your exam. So a question of 10 to 15 marks is expected from residential status. So you may pay heed to that particular topic, because that is quite important. So the first step is that before calculating any income, we see the residential status of the assessee, whether he is a resident in India or a non-resident, right? And if he is a resident, is he an ordinary resident or not ordinary resident? So first of all, we determine the residential status. How to determine that? I will teach you that in the upcoming lectures when I will be teaching residential status. So first point is that we determine the residential status of the assessee to find out that which income is to be included in the computation of income, on which are not to be included, which are supposed to be excluded. Because residential status only decide the inclusion of a particular income for the taxation purpose or not. Then we classify income under all the 5 heads and compute the income under each head. After giving the deductions, we are able to obtain the total income. Quite simple. We see the residential status, we calculate income under 5 heads, give the deductions under section 80C to 80U and obtain total income. Quite simple. Now let us summarize that in an analytical manner. How to do that? After checking out all the status of residentiality of the particular assessee, we see that whether the particular person is having income under a particular head or not. So begin with, let us have a look. We have income from salaries. I told you this is the first head, and that can be in the form of salary, bonus, commission, in any form. If there are any taxable allowances, if there are any taxable perquisites, from there you obtain your gross salary. Thereby you give the deduction under section 16 and you obtain the net taxable income from salary. Same ways you obtain the net taxable income from each head. Whatever the deductions of that particular section of that particular head is having, you give those and you obtain your net taxable income from that particular head. As you can see that while we calculate the income from salaries, we have deductions under section 16. This is not 80C to 80U. Keep that in mind. This is a section particularly related to your income from salaries only. This you will be studying while we will study each and every head. Okay. Then next comes your income from house property, net annual value, whatever you're having of your house property, and the deductions that you give under section 24, and thereby you obtain your net taxable income from house property. Same ways, now let us see the third head, profit and gain of business and profession. You may have the net profit as per the P&L account. You subtract or you can add as per the situation, maybe the adjustments which are required to be made to the profit as per the provisions of Income Tax Act, which are applicable in that particular financial year, and thereby you obtain your net profit or gain of business and profession. Then fourth head, capital gains. Whatever income you are having from capital gains, subtract any exemptions that you are having under section 54 and obtain the net income from capital gains. Then same ways, income from other sources, whatever is the gross income, subtract deductions whichever are applicable and obtain the net income from that particular source. Suppose a person is having income under all 5 heads and you're supposed to total that up, means the gross total income. Suppose if a person is having 0 income under capital gain, so obviously the amount here in point D would be 0. And if the person is having, suppose 6 lakh as salary, annual salary, then A would stand here as 6 lakh. So adding up the income from all the 5 sources, you are able to obtain GTI that I have explained you. And then you simply deduct the available deductions under section 80C to 80U of chapter 6A. The time you subtract these deductions, you are able to obtain the total income. That's what I was trying to explain. Okay, let's move further. These are certain things which are related to total income, rounding off and other things, the amount of tax. This is quite simple, not a very difficult one. See, these sections, the like 288A, this section is important, but the ones that like definition of person, definition of income, GTI, they are more important. This is because related to rounding off, and individually this won't come in your any way in the form of short note or so. It is just for the knowledge that how to round off the total income, and that is defined under section 288A of your Income Tax Act 1961. As it is defined in a particular act, I have mentioned it here just for your reference. These kind of sections you may refer, but it is like you're not supposed to learn them by heart like others I referred before. Okay, now let us see that how to round off the total income when you have understood the meaning of total income. I hope now the 3 terms, income, total income and GTI, all are very clear, I suppose. Okay, now let us see how to round off. It is just simple round off like we do in our mathematics. Let us see, the total income should be rounded off to the nearest multiple of 10 rupees, and for this purpose any part of a rupee consisting of paisa shall be ignored. Means if you are having any decimals thereafter, you may ignore that, and thereafter if such amount is not a multiple of 10, then if the last figure is 5 or more, then the amount shall be increased, means that you round up to the next higher multiple of 10, and if the last figure is less than 5, then you round down, means the amount shall be reduced to the next lower multiple of 10. And I've given you an example here also. Like suppose if a person is having a total income, annual income we are talking about, 8,79,467. Now see the last digit, the digit at ones place, it is 7, means more than 5. This means that we will round it up, so 67 will become 70. You can see that I have mentioned that it shall be rounded off to 8,79,470. And suppose if it is 8,79,464 and 90 paisa, then it shall be rounded off like this, because 90 paisa would be ignored, because I just informed you, see, any part of a rupee consisting of paisa shall be ignored, and then the figure comes out to be 8,79,464. As this 4 here, the ones place unit, is less than 5, so you will round it down and not you will not round it up, so it will be 8,79,460. Quite simple. You just need to round it off to the nearest multiple of 10 rupees. Now, how to compute tax liability on total income? On the total income, the tax is calculated according to the normal rates which are prescribed under the relevant Finance Act and special rates prescribed in the Income Tax Act. See, every year we do have our Finance Act, and according to that we apply our slab whichever is applicable on that particular assessing. The amount so computed after that application shall be increased by a surcharge if applicable, and certain cess, means tax on tax, certain cess, education cess like we have, are calculated with surcharge if any. The amount so arrived at is the tax liability of a person for that particular year. Suppose I've taken here, given you a certain facts here. With effect from assessment year 2010-11, the surcharge was applicable only in case of a company assessing. However, it got updated with effect from assessment year 2014-15. Surcharge has been made applicable to all the assessees provided that the total income of the assessee exceeds that particular specified amount. Okay, so it is like that after computing the total income, after summing up all the incomes from 5 heads, and then after subtracting the deductions under section 80C to 80U. Now the next step beyond that is that we need to calculate the taxability of that income. So for that purpose we do have surcharge and certain cess depending on the type of person and the category that we will be studying and calculating in the upcoming lectures. The last point for today, that how to round off the amount of tax. Let us see the section. In the previous one, you can see that rounding off the total income is defined under section 288A, whereas rounding off of the tax is mentioned in 288B. Okay, the amount of tax including tax deductible at source or payable in advance, anyhow, if any tax liability is there, the interest, penalty, fine, or any other sum which is payable, and the amount of refund due, if we are supposed to get some amount of refund from the tax department under the provisions of Income Tax Act 1961, it shall be rounded off to the nearest multiple of 10 rupees. So same ways like we studied that how to round up the income, same ways we round off the tax also up to the nearest multiple of 10 rupees. And for that purpose, where such amounts contain a part of 10 rupees, then if such part is 5 rupees or more, it shall be increased, means it would be rounded up, and if such part is less than 5 rupees, it shall be ignored, means it would be rounded down, the same ways like we did for the income. So we have completed here the meaning of income, total income and gross total income, and seen how to round off the amount of income and the amount of tax whichever is applicable on that particular income. Till these concepts till now, if you have any doubts, you may write to me. You are having my mail ID, I have mentioned it here also for you. You may write to me, and go on reading and learning and never stop yourself. So keep the spirits high. Take care. Bye bye.